Wow, financial world is quite exciting. If you would tell someone a few decades ago that you are trading winds, most probably the answer here in Latvia would be have wind in your head. But nowadays, the financial world is quite exciting, and that's why we have this super panel at the end of WindWorks 2025. Send in your questions, stage 1 at Slido, by the way. So, not to leave the professor alone on the stage, I would like to welcome on the stage next participant, the CEO of Utilitas Wind in Latvia, Mr. Renārs Urbanovičs. A round of applause. Welcome, Renārs. The CEO and Managing Director of Kongstein, Mr. Erik Pietsch. Welcome, Erik. The Financial Advisor at Rebel Finance and Transactions, Mr. Luuk Oudshoorn. Welcome, Luuk. And welcoming on the stage the CEO of the Estonian Wind Power Association, Ms. Terje Talv. Welcome. And for this discussion, we need two powerful moderators representing the law firm Sorainen. Let's welcome the partner, Mr. Rūdolfs Eņģelis, and the counsel, Ms. Natālija Grāvele. Colleagues, take it away.
Hello, ladies and gentlemen.
Hello, everybody. When before us and before Lena, the ambassador of Denmark was speaking, the hall was slightly emptier than it is now. So I'd like to start by quoting him once again. This is the most important panel of today's conference. So, welcome to our panel. We have representatives from all three Baltic countries here. And we know that there are CFD schemes operating in Lithuania and also in Estonia. And Terje will be able to share the Estonia experience with us directly a bit later. In Latvia, however, we don't have CFDs, and those of us who were present in this morning's panel heard the representative of the Latvian Climate Ministry say that there's no plan for CFDs in Latvia going forward. At the same time, I think we heard the abbreviation CFDs mentioned at every single panel of the day until now. So it seems that maybe some discussion has been missing in Latvia about whether CFDs are needed or not. So my first question would be, Lena, to you. Where would you recommend Latvia to start the discussion to really find the correct answer to the question, do we need CFDs or not?
Well, it's my first time in any of the Baltic countries today. I have been learning a lot about Latvia and the energy system here. And as far as I understand, is that you're currently developing merchant plants mostly, right? So as I said before, I'm an economist, right? So if you can develop merchant, you should, right? One experience that we have from other markets is that we have seen CFDs emerging first in offshore wind, and that's because they are financially very complex. So the projects are financially very complex, and CFDs require some sort of complex financial understanding to also, so that the effects also come true. For example, decreased cost of capital and better financing conditions and so on. So we've seen quite a dominant picture around CFDs in offshore wind, mostly first in these countries, because it's large contracts, you can structure them very well, and you can also tailor-make them in the design. So while I'm not suggesting that you need to wait for offshore wind with the CFDs, I think it would be a good place to start to try out some design considerations. And then once you have a viable, interesting design, doesn't have to be implemented yet, but you can also see if you can also implement or see if it's applicable for some of the larger onshore farms as well.
Yeah. So you think it's better to have the discussion and analysis, and then the decision should be made?
Well, in my experience, I think it takes maybe about 2 years or so until people have agreed on which direction to take exactly, because there are many different design dimensions. I went a little bit over that. Remuneration is not the only decision to be made. There is quite a lot of different other decisions also about safeguards and monitoring and exit options and all sorts of different PPA, parallel options and so on. So there is more than only the price stabilization towards these contracts. Yeah,
Yeah, thank you, thank you. Terje, question to you. So Estonia is one of the Baltic countries who opted to introduce CFDs in their as a state support for the renewables. So could you please maybe elaborate on the reasons? So what were behind this decision? How you came up with this?
Yeah, I have to say, first of all, that onshore, we don't have any ongoing CFDs like it will be, but the previous one were basically price floor, and there was limitations. So, and it also showed us how much the CFD is needed, because if we did only price floor, everything was changing so fast, and the auction announced in 2023 is not really doable right now, because everything has changed so much. But why CFD? In Estonia, when I start to talk about Estonia, I always say that we are producing fourth of our electricity from oil shale, and it's the greyest grey electricity, and half of our electricity is coming from Latvia and Finland. So there is a need, but why do we need CFD? Because if you are going to the bank with a talk that there is enough domestic consumption, the bank will say it's still not bankable. So the desire for the CFD is not coming from developers, it's coming from the banks, the financial institutions, and they say that you need CFD. We would like to do PPAs. Who wants to go to the government door? Nobody wants to go there. We prefer CFDs, PPAs, but we cannot do it because there is no big offtake in Estonia. And it means that, and the new facilities are not coming to Estonia because we can offer them only the greyest grey electricity. So it's the egg and chicken, and it's like the CFD is the bridge between it. So I don't think that CFD will be needed to the end of the time, but right now to get the new facilities in, new production in, new offtake in, you need actually CFD to fulfill this gap. And I really love this finance, that's financial aging, so it de-risk this for this project. Of course, we have our domestic consumption. We can sell this electricity to the market, but we need some kind of instrument. And also I wanted to say that there is always some developer, onshore, offshore, who will say, like, we don't need CFDs, like, we can handle without it. And it depends who is the developer. If it's big, and it depends heavily what is in their portfolio, what is their stand, when they go to the bank. But if we are thinking about the small, like, normal, regular developer, they need CFD. And I repeat, it's not forever, it's for now. When we can increase our offtake, then of course not in the future.
Yeah, so it's like a temporary solution until we reach this necessary offtake level.
Yeah.
Thank you, Terje. Erik, then the next question will be addressed to you. You are working a lot with the offshore development, yes, we heard, I think the majority of the CFDs are intended for offshore, so maybe you could elaborate what is the importance of CFD for offshore, and what is your vision on what impact do CFD leave on this project if developed with or without offshore?
From a developer's perspective, the support mechanism is in most cases still relevant. So we've seen that also in your slides. The majority of projects cannot without any mechanism of governmental mechanism. The CFD model, or the CFD model, has been the most prominent up to date, and most of the economies are swapping into some kind of CFD model with some minor adaptations to the local market. So first of all, yes, there is a need for the CFD. There's a reason for a CFD, which is the cost of financing, but it's not the only part for making an investment decision as a developer. The offshore wind market is a global market, so it's competitiveness around the world. And there you also need to position yourself as a country, how to attract investors. And CFD is a model that is making offshore wind attractive for developers.
But in case developed without CFD offshore, can it be competitive, like later on price-wise?
It can be competitive. It depends on the geographies and on the industries. If you have PPAs that you can enter into, that's of course a viable way, and sometimes even preferred. So I absolutely agree. If the market can handle it, then the market should handle it, and the government. If the government has the ambitions, then it needs to provide a mechanism that is favorable. You always have an investment list as a developer or as an investor, and it needs to be attractive enough to make the decision.
Thank you.
On the point that Erik just mentioned, Luuk, I wanted to turn with a question to you, because Erik said it's a global market.
Yep.
So there's competition between states for attracting investment, for attracting developers to build new projects. So in fact, if we look at it from the kind of financing perspective, we can see it on this micro level that Lena was describing, that you need CFDs for many projects to achieve bankability, to achieve the state where the bank is actually willing, or the financier is actually willing to lend money to it, where they think it is safe enough financially to do that. But, as Erik says, there's also the competition between states. So if you had to put yourself in the shoes of a financier, then how would you evaluate two options or two countries where one is offering CFDs and the other isn't? As a financier, what would be your risk assessment?
Yeah, I think to start with, and also the financial market will be international. So if you have an offshore wind park, those are such major sizes, also in terms of the financing need, they will always mean there's a majority of financiers from all across the world. And there will always be a small group of lenders that might be willing to provide with lower certainties of revenues, that might be willing to take on some merchant risk, etc. But you'll never get your whole collective funding need without any kind of support scheme. So I think from a financing perspective, it will always be a strong requirement in case of offshore wind, and so let aside onshore wind, that might be slightly easier, but for offshore wind, there will always be a need for support scheme. And then the question is that CFD or can that be an alternative? And I think what's good to get in our heads is that also in cases, Lena described, that the projects maybe with negative subsidies or even without a CFD, that's not without any certainty on revenues. And so those are, for example, in the Netherlands, we have seen that where there have been offshore wind parks without CFDs, but with strong PPA support from local consumers. Well, that's the chicken and egg problem we described. So a lender or a financier will always look for some kind of certainty there. Mm-hmm. And I think nowadays it is becoming more and more irrelevant if that is a CFD or a PPA, assuming that the PPA is with a bankable counterparty. Well, that's the whole issue here. So irrespective of it being with or without CFD, there must be revenue certainty to get your billions of funding, and that's the size we're talking about. And that simply won't come without some kind of state or strong PPA support. So I think for a lender it will be quite binary. There won't be billions of funding if there is no such support. And if you would then say, if we do it without, do we then still have investors? I think Erik mentioned it's more, and CFDs is target or a part of this equation. There's more to it. So there might be parties that can do without CFDs, large investors, but that also diminishes the amount of parties that you can actually invite towards a tender. And the amount of Ørsteds in the world, or name them, that have a balance sheet that can do these things without project finance, that's easy to count on one or two hands. So even if you get them to come to the country, then the amount of competition that you will have is so much smaller than in case of attractive competitive financing terms, that they will also uplift the pricing.
Could Latvia attract such developers?
I think it's all about feasibility and attractiveness. So part is clearly the business case. If it works out and if financial returns are significantly high enough, then at some point people will come. I think that's a clear one. But it's also about a bit of perspective, like supply chain, will it work? Is there a long-term perspective? Do we see from the government a big pull towards, say, a long-term plan with not only the next CFD, but maybe also the future? And that's what Erik explained. Developers can choose where they go. And having one very good business case for the next tender might be appealing, but it will be better to have a long-term future. Or you can say, okay, we start to really invest as a developer in our presence in the Baltic states or in the Baltic Sea. And I think there again, you're mentioning on bridging the gap comes back in. And if that gap is bridged, then I think you can attract investors that in the long term might also get industry to be your local consumer, and then the ball can start rolling. I think that's a very long-term vision. But in any case, if you want to get there, then you have to have something for the short term, which is the next one or two tenders, which won't come to life without strong support.
Yeah, thank you for your opinion. Renārs, question to you. Your company have developed like the biggest so far wind park, and we see also from the grid reservations that there is a lot of wind. It's in the pipeline, and many of the projects are entering the construction stage. So we actually see that development is already ongoing, although there is no any state support currently in Latvia provided. So what is your view? So how do we first of all need CFDs for onshore developments, and how would it, what benefits would it bring, and for whom?
Well, certainly. Well, I fully agree that we need this type of support in Latvia as well. Just look at the figures. So Lithuania, 20% of annual consumption is generated by wind, so penetration is 20%. Estonia is, well, close by to 20%, well, largely on the basis of much smaller local production overall, so it's weighted against imports. Latvia, 4%. We got plenty of years to develop this. Well, it has been stalled, and one of the reasons has been rather difficult access to long-term financial resources and on a really competitive cost basis due to lack of long-term instruments. And those 4% that have been built out so far, all of these projects started as feed-in tariff supported projects. So no new market-based developments that have been commissioned over the last 3 years. But talking about CFDs, well, it's a matter of perspective, of course, and I guess it's pretty personal depending on where you are in business or as a private. So I'll just be a bit provocative and ask everyone. So just for a reference, average electricity price, annual electricity price last year in the Baltics, 84 euros per megawatt hour. So are you comfortable to sign a contract, and be content with, this price level as a household, as a private consumer? Just please raise your hand if you are comfortable with that. Now, would you like these prices to be lower than 84% as a private individual? Well, much more support to that. Now, please step out of your personal shoes and step into mindset of a company, running business, manufacturing, essentially energy consumer. Total energy cost, electricity cost of the product in that case is most probably 10, 15, 20%. Well, if you are doing steel, well, perhaps more. So well, in your personal case, it was just a little fraction, like a couple of %. Now, in this case, of course, electricity cost is much more important as a consumer. And in that particular case, most probably, you would definitely ask for, well, lower electricity price because it is directly reflected in your cost of manufacturing, effectively, your competitiveness on the market as well. Now, as I mentioned, it's just, well, perhaps 15–20%. And now turn around the table and, well, just consider a case of, essentially developers and investors in wind farms. Well, 100% of their revenues, 100% of their business case is based on electricity price. It was a couple of percent for you as an individual, 10–15% as a business, and now in this case, you are totally dependent on that. And the certainty which is required really to commit and to invest into, well, asset which will be there, I would say, well, I wish everybody very long and joyful life, but then again, investment into wind farm is something that will reach essentially, well, it's not really clear what will see its lifetime first, you or wind farm. So it's really long-term investment, and thinking into this perspective, cost of financing is really critical. And having this certainty, it's not about, well, paying premiums or really supporting the business, but generating certainty on behalf of, well, the state, of the government, is really essential to kick off this long-term investment.
Thanks.
I want to remind the audience that you have the opportunity to ask questions via Slido. At least I don't see any questions until now. I hope there's nothing wrong with the system. Lena, I wanted to come back to you. So for Latvia, as still considering whether to introduce this scheme or not, so what are the pitfalls that you would like us to be aware of, that we should avoid as a newcomer to this system?
Yeah, so the very big discussion at the moment in Europe. So maybe I can say, so there's two things, and I think that's what we really need to be aware of when I made this matrix with the magic quadrant, right? So these older CFD schemes, they do not expose producers to short-term price variation. And I really would like to urge you to avoid that, because we have come past that, right? Because we don't need renewable production that does not care about the market price signal. We need them to care. We need them to react to the market price signal, but to an extent that it's manageable for them, right? So this long-term price stabilization. And what we've also seen is regarding negative price signals, so we have seen more and more negative prices, and so these extreme prices, it is becoming a problem for investors. And the uncertainty around that, and that's something that we are seeing in European discussions on CFD implementations, is to give some kind of compensation for a certain amount of, for negative prices, because it's not a productive risk for the investors. They cannot do anything about negative prices. Of course, they should not produce when there is too much electricity in the system, but they should not be the ones to suffer from it, because the reason why we have negative prices is there is not enough flexibility in the system. And the renewable producers are not the reason for too little flexibility in the system. There's other reasons for that. So exposing to short-term price variations, definitely yes. Safeguarding against too many negative price hours, I would also say yes. And then the third one, we have seen that the current CFD implementations, as all support schemes that we have ever seen on the market, or most of them, they do sometimes distort the bidding behavior on the market. So on the short-term price markets, because you are paying out a premium We can fix that for the day-ahead market, but for the intraday market, there are still some distortive effects regarding the bidding, because you could imagine a case where there is a positive price, but you are under a clawback situation where you have to pay back to the state. You would end up in a negative, then you would not produce, although the market price is positive in the actual production. And of course, we want to avoid that. So the discussion currently in Europe has gone in that way to decouple the CFD payout obligation from the actual feed-in to the grid. If you don't have that coupling, then your bidding behavior is not affected anymore, because you are paid out anyways, no matter if you down-regulate or not. I find that a little bit problematic, and we still need to figure out a way of how exactly to do it, because, and I think that's maybe especially relevant in your situation where there have been some trust issues, as I understand, around the old feed-in tariff, for a government to pay out. So our incentive, what we want from renewables, is to feed in electrons into the grid, right? And if you create a scheme that is paying out, no matter if you feed into the grid or not, I would find that a little bit problematic. So I would urge you to work on schemes that are incentive aligned, right? What we think, we call it in research, where you are paying whenever you get the product that you're actually paying for, or you actually what you want. And then by that, you are unleashing the creativity towards of the developers towards the product that you want, as compared towards complying to the rules that the government has artificially set. And I think that would help in creating more trust into the system, so that you are optimizing towards the right thing, which is valuable electrons in the system. And that is the European discussion is going a little bit in a different direction right now. But I do think that it's possible, especially when you are new to the scheme, to still develop these kind of production-based CFDs that are directly coupled to the production, and they are much more simple and much more straightforward. So I would, maybe that would be one of the things to keep in mind.
Okay, so basically, to summarize what you said, it sounds like, so it's a complex market, so the CFD, the tool to address the price volatility, also needs to be complex. It needs to have all these nuances in mind. It needs to have the right incentives and the right disincentives, so that it works to the best interest of the consumers ultimately. And as the market develops, we learn more and more. So, in that sense, a country like Latvia, which will only be introducing it, hopefully, in the future, will be able to learn from all those past mistakes. There's one thing that I wanted to unpack a bit from what you just said. So you mentioned basically that there's the basic CFD element, which is basically trading the price that is above the strike or below the strike. So basically, who takes the risk of the price volatility? But then you mentioned the negative price, and that needs to be compensated. And from your slides, I remember you showed that there have been some CFDs which have already been net negative for the producer. In a sense, for the state, it's actually profitable at the end of the day. I understand that was what you meant by net negative CFDs. Is that?
So I would differentiate between negative subsidy, right, when there is a net payout from the developer to the state, which is above the strike price, and then when you have your daily operations and you see spot prices that go negative, so below zero spot prices. The problem that we've seen in early implementations like feed-in tariffs and so on is that when the producers are still getting subsidy, they wouldn't shut down production, and then they would aggravate the negative price problem. And negative prices in general is problematic for spot markets. So we need to design the CFDs in a smart way so that they, first of all, don't aggravate the negative price problem. But second, I would also argue that they should not be fully exposed to that negative price risk because it's not their fault. It's not a productive risk for them. They cannot do anything about it. State government should do something about that. Better interconnection, more batteries, more flexibility in the system, better balancing mechanisms. And that's something that you can compensate. It's not specific for CFDs. You can do that under any support scheme, but I think that's relevant to take into account as well.
Okay. Maybe a quick addition to this. This is also something that we see in lender landscape, the increasing awareness of negative prices, both from investors and for lenders, and this is really the next kind of risk that is there. So also in a lot of, for example, Dutch projects which have a classic kind of floor model, so there's simply a minimum kind of feed-in tariff, but they do not get any subsidies in case of negative prices. So given that we have a completely duck curve, for example, for solar, but it's also starting a little bit in wind already, you see that solar isn't worth anything anymore. Like Lena's pictures of the 50%, or was it? I think it was in your slides. And for solar, that's even much worse. And at this moment in time, investors and lenders have no clue where that is going. And some parties think, in some years we're fully electrified again, and this should be gone, like having more interconnections, like having more flexible, etc. But also thoughts like, okay, this is going to be more extreme in futures. And then you don't only have your pricing risk, but also your volume risk. And that's also, from a lending and a risk perspective, really going to complicate assets, even if you have a well-defined subsidy scheme. So I think it's a very valuable addition to make sure that it is in some way covered, and definitely not by simply allowing more subsidy to flow in if you produce during those hours, since that would exaggerate things. But it should be in somehow managed, as it's a risk that at this point cannot be borne by the projects themselves, as it will further complicate lending and banking and financing of it.
Yeah, thank you. You have mainly concentrated on external risks, and I would like to discuss maybe more internal risks. And Terje, yes, I'm addressing this question to you. So we know that the past year there was very intense work on one law regarding CFDs for offshore. There was a lot of expectations from all the parties, from the developers, from the lawyers. So, then after some discussions in public in the beginning of this year, everything has been stopped, postponed. So maybe you could elaborate a little bit on this situation. What was the reason? What led to this postponement? And maybe lessons learned. And what would you do maybe next time differently? So what other parties can learn from this?
Oh my God. Yes, last year our government announced that there will be CFD for the terawatt hours, and it's yearly amount, and it will cover 1 gigawatt offshore wind park, normal size offshore wind park. After a while, they decided it's a bit too much, and they will do 2 terawatt hours of the auction. And also it wasn't CFD, there was some other conditions. There was price, maximum amount to the subsidy. So it wasn't
kept.
Yeah, it wasn't really CFD like they show in the slides. And there was some other parts. There was no indexation and so on. And we weren't too happy, but it was still somehow almost doable. We were still hoping. And after a while, then our new minister decided that we will postpone this process 1 year. So come back April 2026. And the main reason was that it's too heavy burden for the end users, because it will be reflected in the end users' electricity bill, and it will be renewable electricity fee. And they say it's too much. We did our calculation, and for Estonia to have 1 gigawatt offshore wind parks with all the benefits for the jobs, for the offtake, for the tax money and so on. It will be for one household, it will be 3 up to 4 euros per month, and it will be every month in the year and for 20 years. So it's less than or some amount like one coffee from a gas station. So, but for political side, they felt that is too much to burden. Can we argue with our political side? Oh, at least we try. So, but our new minister, he has some financial background, and he has promised many, many times that offshore wind energy still will be part of Estonian energy mix. So now they are trying to learn and implement some tools from the new Green Deal, Green Industrial Deal from EU that is coming in the summer. There is guidelines, and maybe we can take something from there. And for my understanding right now, he is trying to create some new form that is not directly CFD, it's not direct subsidy, but it's like state loan or I don't know, something like that. My personal point of view is that we still need CFDs because it has proved to be an efficient way to bring in the new capacity. We need the new capacity. Oil shale is dying slowly. We have connection points with Latvia and Finland. It's really nice, but we need to produce our own electricity, and we need the next step to get over the bridge. So I hope that after a while we will return to CFD, but we have to take this detour, and our Ministry of Climate and Energy have to take this detour, and maybe we will be smarter next time. If you want to learn something from Estonian, then be faster. I always say that there is a joke in Lithuania that before Estonian roundabout there is sign no more than 3 rounds because Estonians are so slow. So be a bit faster. There was like good wind, everything was going well, but we didn't finalize our procedure. And the other topic is be really, really clear and communicate. I think that was something that was missing for us because the subsidy was announced via X or Twitter by some parliament member, and we rushed back and tried to explain and tried to show slides and what is CFD, what is the beneficial parts to government, and so on. But it wasn't really effective, and somehow the big numbers that at the end of the day is 1 cup of coffee of the month, for the month, it will escalate for something else. So be smart and be quick.
So basically the communication is the key, like, and informing and educating
because
the consumer.
If you want to put some extra fee or tax for the taxpayers, then if you are living in Estonia, that is our daily news, there is some sort of new tax or the tax are increasing. So yeah, that is like, I think that was miscommunication from, I am pretty sure mostly from the government side, but also we have to take some blame, and also maybe there is some aspect that we can do better in the future.
I mean you as the association.
Developers, yeah.
Okay, yes, thank you. We'll try to consider it and learn from it, yes, because the communication really is an important thing. But returning maybe a little bit to CFD design, Erik, I would like to address you. Well, there is plenty of ways how you can design CFDs. There are like guidelines developed on EU level where like list of requirements which are sent mandatorily, and also these CFDs, like there are no two same CFDs basically in two countries, and they're mostly the tailor-made. But what's more important for you as a representative of offshore developers, what you're seeking for in this CFD design, what's important for you there, what are your expectations?
It's reducing the cost of capital, of course, and there are local adaptations. If you need to have a deeper dive into the geography where you are going to invest. But important for a developer is to have security as well, to have security and commitment from the government, from the supply chain, and from all possible opponents to such developments. So there's also more risk evaluation, so it's always a risk evaluation for investments than it is on the financial side.
And maybe a little bit about some principles. How do you see, like in terms of granting stability and clarity, is this important when designing this CFD, like for you and for the developer?
It's already seeing how politics are moving ahead, or if they are in doubt and postponing decisions, then it's of course a risk factor that is to be priced into your investment.
Okay, thank you. Can I ask maybe a couple of questions regarding that? Right. So, how do you see caps on total payments in the design? So, saying that, for example, the CFD automatically ends if there's, I don't know, you've paid 5 billion euros or something like that.
That's an interesting question, to have it reduced in time, to have an initial security for your investments and your cost of capital, and then have some kind of a re-evaluation or renegotiation. I haven't seen a model or a principle that as from the beginning you can apply, or a mechanism, a stop mechanism or something ahead, but I think it would be feasible, and this then comes more to Luuk in the question on the financing part from the lenders.
I have seen them in tenders, so where there is indeed a fixed cap on a maximum amount. I'm not sure in which country it was and whether that was already fully definite or not. But I mean, from a financing perspective, this would work. So assuming the business case works out, then the financing works out. What you would typically see in these kind of situations is if we have a fixed, say, 20-year tenor, then all developers would run to the lenders and say, okay, we want to have a 20-year loan. If it's 15 years, then it's about a 15 years loan, or maybe a little bit merchant exposure somewhere. But the moment that becomes variable, well, then also the tenor becomes variable. So it can be quite well structured to say, okay, we have in our base case, say at P90 production levels, we have a 20-year tenor for a CFD. And now all of a sudden the government imposes a maximum cap, and if actual wind is at P50 or something like that, more wind than assumed in our maybe conservative lender's case, then that would mean that your tenor of your CFD decreases. So pro rata, then a lender would require you to pay off more of your debt and a bit sooner than you would have agreed maybe on the first day of your lending. And that's a system that we know quite well also from other support schemes, but also from other kind of availability contracts. So that can be quite flexible, and the key risk is still mitigated. And lenders would always be happy to reduce tenors, as also from a technical risk, they will be lower. So I think this can very well be structured, and I think also provides to developers significant comfort. And the developer itself would not be against a bit of market risk. And if the tenor is being shortened because of higher production, that also means his own equity is being repaid sooner. And thus any market risk that would be after the initial tenor of your CFD would then all be upside. So I think this could for most stakeholders work pretty well. And it might be a party that says, oh, we are really here as a developer like to take the technological risk, the production risk, but not the price risk. Well, then put your asset on the market the moment it has been paid off and your CFD is ended. And there will probably be an aftermarket for repowering or parties that do are in capabilities of closing another PPA, maybe for another 5 years, something like that, there is residual value after a tenor. But it's really to get your financing in place that you need this, and that can also be done with a flexible amount, I would say.
So meanwhile, we've had some activity in the Slido as well. So the audience is starting to get engaged, and a few questions are probably best asked from Renārs in the first place, so that maybe the other panelists can comment as well. A few people are asking, essentially, Renārs, with your comments today on the panel, are you implying that it's not feasible to build a wind park without CFD support in Latvia? And there's one comment in the Slido which says, so it sounds like everybody in the panel is convinced that CFDs are a necessary precondition for new wind development. So maybe we should give a chance to those who are ready to do it without. So, Renārs, what's your take on?
Well, of course, everybody has been welcome to do so for many, many years. Well, but talking about, well, pricing levels and well, a auction scheme, a properly done CFD scheme is not meant to enrich wind developers or energy companies and turn them into billionaires overnight. A proper scheme is meant to be actually a fingernail-biting exercise on behalf of investors who are competing for this limited opportunity to actually to get their project on a level which is sort of providing some kind of certainty. And I'm pretty much convinced that eventually, well, removing this uncertainty, which is based currently on a, well, projects being potentially developed for merchant market, could really, well, end up with CFD, well, prices for onshore somewhere within 50, 55 euros, something like that. Compare this once again to 84 euros on the market last year. There is a gap, and of course, well, the issue here is fragmentation of, well, industry, fragmentation of consumption. If you've got large consumers, you can always talk about PPAs. Well, if there are not, well, that's the case of Latvia in this particular case. It's very fragmented, and in order to bridge this, well, gap and this uncertainty, which, well, and the experience of past 5-6 years has really provided an insight into what kind of miracles we can expect, or let's say unexpected miracles expect on the market with prices of 30 euros in times of COVID, well, 200 euros in the times of energy crisis. So it's really a mix of fortunes and misfortunes and so on. But then again, well, I guess everybody, both on consumption side and on generation side, would be more than willing to trade off this uncertainty for a, well, level which is, well, somewhere there between 50 to 55 euros for a long-term planning of their own, well, operation, development, investment, and so on. So it's not really that it's, well, prohibiting anyone, and it's really not really mandatory to, let's say, to be there on the market. But then again, it would really help to kick off investment into this sector, and ultimately we would end up with much, well, essentially it's a tool for government to earn premium on, well, the CFD service they would be providing for the time being, at least for, well, 4 or 5 years at least.
Maybe kind of continuing slightly on this theme, I think it's a question perhaps to Lena and maybe also to Luuk. I wanted to bring this back to the panel in the morning where the Latvian ministry representative said, so we're not looking at CFDs, but we are looking at these state-backed PPAs. That's the new instrument which I understand was introduced last year with the amendments to the energy market design regulation, which effectively means that the state can provide guarantees as credit support for the off-takers under PPAs. At the same time, I mean, how can it work if there's no active PPA market in the first place? I mean, will the availability of state support generate new PPA demand? Is it possible?
Yeah, I do think so. I mean, there are several initiatives in Europe and also in individual countries to push the PPA market. And I think if that can fly, I think it would be a good version. And also the European Commission has a couple of weeks ago announced that they would support these tripartite contracts, where you have the government and the producer and the off-taker as some kind of a three-way agreement. Contracts, so that they are backing each other up, and I think that's an interesting solution. Wherever it can work, also if you can standardize it, if you can securitize it, yes, that's fine. If that then actually requires the physical exchange of electricity, or if you would then do it via the electricity market, is open. You know, in the US we have seen a lot of contracts that are virtual PPAs, which we would in Europe call CFDs, right? So there are the distinction between these the contract types is then starting to dissolve a little bit, right? So the more virtual your PPA becomes, the more CFD-like it will be. So I think in that sense, you can call it a PPA. You know, if the principles are the same, I don't think that there is, for the investors, there will be a big difference between the two.
But in this type of support, what about this price volatility? Is it addressed in this scheme or not? Because I understand if it's the PPA and the state backs like the off-taker, the price volatility risks, how we deal with it, it stays with the developer.
Well, I think it will depend on how you structure the PPA. If it's a fixed price, if it's a base load, or pay as produced, I think that will depend. So the CFDs are typically pay as produced, right? So they would pay for any volume. You can find PPAs like that. And if you make them virtual, financial, then they are literally like a CFD, right? So I think it depends quite a lot on how you're structuring the contract. So.
Luuk, any thoughts from you on this?
Yeah, mostly agree with Lena. So what you can do, and what we are seeing, for example, also in the Netherlands and surrounding countries, is that multiple consumers are being pooled, and it can be small, medium businesses, that can be, well, households probably not, but at least a kind of pooling, and then together setting that in the market as a PPA consumer. I think that works well, and whether that's then a government backing it, or a kind of warranty fund, or in a financial structure to mitigate that financial risk, that works. Key thing is, however, you do still need consumption that requires a certain amount of energy. And of course, especially in Latvia, I think a lot of consumption is from the consumer side, and that might not be the most realistic way to bundle those kind of PPAs or bundle those kind of local consumers. So what you would ideally have is then also indeed sufficient consumption on the local medium enterprise kind of things that together will flow into a significantly sized PPA. And I think, for example, for onshore, that could very well work, because you can get to that kind of consumption amounts. Question is whether you can get to a gigawatt kind of PPA scale for an offshore wind park. I don't think so. And then also the financial backing there becomes quite severe again. And then the question is what that would mean for a government compared to a CFD. But I think onshore, this is clearly a route where we see multiple states going to.
Maybe just as an addition, right? So by adding this, so instead of having the state have a contract only with the producer, you also add this leg of, the contract with the consumer. What the state is actually starting to do is acting as a market maker to bring the two together. And as you said earlier, maybe that's necessary as a kind of a bridge, because at the moment the two, they don't find together, because you say there's a very small fragmented consumer side, and there is no standardized contract. So this function as market maker, especially in the beginning, I think that could be really valuable from a state side. Maybe with the risk of state controlling quite a lot of the market, which we also need to be wary of in some way.
You probably could still take away the market-making part from the government. That can be a private party, a utility, a local trading company, whatsoever. But somewhere in the chain there has to be financial security, and that can be the government. That can be a very big pot of money sitting around somewhere. Probably not a good idea, but at least a financial stability component. And whether that's indeed, and we have seen that also in the Netherlands, there has been these kind of national investment programs that have simply set aside confidence for this financial stability to these kind of utilities that try to bundle these PPAs, and that is now slowly starting to work. And I think it would make sense to have the government take that position and to bring that financial security. But I don't think it should be the core goal for them to become the market maker. I think the market can do that, but you do need somewhere the financial strength of government.
Thank you. Thank you, Luuk. And we are running out of time. The last question I would like to address to Renārs. If we're still considering the CFDs for Latvia, what, in your opinion, would be the first steps to take, and when? Whether it can be too late for it, thinking about it and introducing it?
Well, based on what Lena suggested, that, development of a proper scheme, and which can be also run through all stakeholders relevant to the process, would take at least a couple of years to get that. Well, we should have started this process already a couple of years ago. But, in this particular case, it's not possible and viable, so we would have to run some a bit fast-track process in order to do that. But then again, well, there should be intention on the government's part, first of all, most probably on somebody who is, there with policy, making an implementation to come up with a solution which would be a fair representation and a fair, CFD scheme in a way which, as I mentioned before, to be a nail-biter for somebody participating as an investor. So it's not an enriching scheme for investors. It's something that is down to earth, trying to capture exactly what is needed in this particular case, massive investment into wind industry and deployment of wind resources in Latvia and in the Baltics. So, I guess it's a work to be carried out reasonably soon. We are hopeful, of course, if this is properly done, it could be achieved within a year, but then again, there should be political will to, address this.
Thank you.
Well, there's no time to lose, and we hope that today's discussion will trigger more broad political consideration of these topics in the near future. So, I would like to ask the audience to thank our panelists for sharing their views, and this is the last panel of the day. Thank you.
And thank you to Rūdolfs and Natālija for the excellent moderation of this not so easy topic.